I think it's going to take the right administration, the right people to help banks understand how are you going to make deals move better. All these banks that have failed these few years, it's so avoidable. How many times do we want to repeat the same cycle?
Welcome to The Alternative Investor, the definitive show for investors seeking private alternative investments. Here's your host, Matt Johns.
Today I had a great conversation with Chris Karagouzian, co-founder and CEO of Help With My Loan, a fintech company that leverages their disruptive AI technology to seamlessly connect brokers, banks, and consumers with a network of over 300 lenders. Chris's relentless pursuit to revolutionize loan origination comes honestly. He started his career working his way through college as a commercial real estate agent. He then spent the next 10 years in banking, where he worked his way up the corporate ladder at Wells Fargo, JP Morgan Chase, and then US Bank. But then Chris saw an opportunity to develop client-centered solutions where there were gaps in the financial sector, which led him and his partner to start Help With My Loan in 2017. They now proudly boast a 97% matching rate that easily bests the industry standard of 55%. As a result, they've originated nearly $850 million in loans. You'll hear Chris's drive to succeed in everything he says throughout the interview. Welcome to my conversation with Chris Karagouzian. I'm doing great.
Good, man. Yeah, you look great. I look beat up a little bit.
I think you look fantastic. You still got the T-Rex hanging out and
right there. I moved the unicorn for you. My daughter is unicorn, so just it's not in the shot.
Well, the magic is still there, so I appreciate that.
It is nice.
Well, Chris, okay, well, I'm glad to hear that things are going well on your end. When you started Help With My Loan back in 2017, tell me a little bit about why you started it and what problem were you seeking to solve at that time?
Yeah, the biggest problems we were frustrated with is just the front end aspect, right? Because it's a couple of pieces. You got to talk to either a customer, center of influence that's giving you the deal, and then getting their package, right? That can take time. Then you're siphoning through and understanding the package. There's, straight W-2 people that are easier financials. There's complex people, right, with different entities. And we were using spreadsheets and Excel formulas, right? So you got to go to page this of the tax return, line item, et cetera. Make sure you don't miss a decimal point, cash flow, everything. And it took, some deals took days, weeks, a month just to underwrite. So when I met my co-founder at US Bank, prior to that, I had been out at the bigger firms as well. We decided there's got to be a better way, right? There's got to be technology. So when we looked, there wasn't. And at that time, we were getting recruited. He was going to a bigger bank. I was going to a private commercial firm. And we just had a really life-changing lunch that said to each other where, he had told me about Help With My Loan. He had bought that domain 10 years prior to meeting me. And, we were just like, man, there's got to be a better way to do brokering, customer facing, automating. And then we just decided, you know what, let's start it. Let's not take these jobs. Let's stay where we're at. So we launched the beta version in July 2017. It worked. We had 12 lenders in a database. And basically, we created this software that automated that front end of collecting the package, analyzing it with the right scenario questions done up front to move things 80% faster than the way it is. Fast forward to where we are now. We have our 2.0 version that has actual AI optical character recognition technology that can read the personal financial statements faster than any human, can underwrite the tax returns, P&Ls, net operating income documents, back statements, everything. And what that means is two things. You're doing it 80% faster than the way banks and underwriters and brokers are doing it now, which gives the customer the best experience. And secondly, we have a 98% proven funding rate at over $850 million of lending that are 100% performance at every single bank. Those two things right now is what we attacked and solved in the industry with our current model of our company.
So how does lending typically work? Go a little bit more into that and why it takes so long for all these other banks and so forth.
Well, it's the biggest thing I'll say about banks, right? They're not innovators of technology. Never have been, right? They always look to use other technology, whether it's Venmo, Zelle, Apple Pay, different products like that, correct? So they don't create themselves. Reason being is they're not innovators, but they're more so also highly regulated and based on products. And that's understandable, right? They got to make sure they're not getting fine. They got to make sure there's so many different regulations they're meeting. They got to take care of their employees, everything. So they look for technology out there. They're also stagnant in picking that up and adopting it because there's also a shift in the banking industry of how much should we automate, how much we just keep the way business is. So that's probably a big reason why my like people like me, Jack, also as my co-founder, left the industry. Is we were top producers also, right? People always ask that. Is like, well, why doesn't it happen? Well, think about it this way: if you're not even a top producer, right, and you're making six-figure salary, bonuses, vacation, awards, all this really cool cake life, right? Why would you walk away from that? You'll deal with the, you know, frustrations of the industry. Now let's go a step. Let's say you're not a top producer. You're just a medium to low income producer. You're not going to leave the industry to fix it. You're okay getting in what you're getting, pay your bills. I respect that, of course. Um, but so that's that industry. It's the top people are like that. People working for the bank are like that. And we're not. It's not an ego thing of Jack and I are just you know, we are in essence like a little different of a breed that said, "Hey, let's give up these really cake life to do something bigger and better for the industry and also for our families, generational wealth wise as well."
There's a lot of money going around loans and just the movement of money, really. But with banks, there's a lot of money to be made with these loans. Can you explain a little bit behind the business about how banks typically make money, and then maybe you can parlay that into how Help with My Loan is making money off these deals too?
Yeah, easiest way is deposits. The first thing they do is take your deposit. You got to give them your checking account, savings account, different investments, right? They give you a certain percentage on that, right? So what they
Mhm.
use is as they're pooling their deposits, well, the bank's got to pay you interest. They got to make more money. So what they do is that money goes into credit products. So you're talking about your personal and business credit cards, commercial real estate loans, business loans, personal loans, residential loans, right? And then they decide to lend that out to the consumer and businesses. They charge you fees, percentages that they're going to make on the term of the loan, whether it's from 1 year to 30 years. So their revenue is really based on money coming in, but them lending money out and risk assessing their products that, hey, we have a tolerance of what we're willing to lend it out to. We have a tolerance of what is the risk in case they default or don't pay. And that's why they have stress models on the back end when they're underwriting
Mhm.
deals and bringing in products, as well as understanding what is out in the market. We'll do some of the things that are common in the market, but where can we risk and be a little bit competitive? And those are basically a nutshell of how banks make their money and put their products out while risk assessing. And at the end of the day, reporting to their board to make sure the shares are going up, right? That's the bottom line always in any business. The shareholders got to make money.
And is that due diligence process on their end, is that what generally takes so long?
Absolutely, right? So, I think you look at it as anybody, even, some people might give $100 to the family. You're analyzing it a little bit, right? Like, who am I giving it to? How can they pay me back? It's kind of like those 5 C's of credit. That's what the industry
Mhm.
has, right? You have the capacity, conditions, character, collateral, and capitalization. So it's like that's what banks look at it. And that's the same way as they're looking at what am I giving out? How can I give it out? How quickly can I get it back? Right? Because the model is always we get it back, lend it out again at maybe a higher rate. So they're definitely always analyzing how they're going to make money on that.
Now then, how do you guys earn a profit off of this too, being more of a middleman in the whole process?
Yeah, so we have two models. Our main model that is about 95% of our revenue is our transactional model. So we internally use this software to move our deals much faster than the average broker and bank. And we collect either a commission from the lender or bank we place the deal at. If it's obviously a bank that doesn't pay commissions or give us a fee, we have to charge our client, pretty standard procedure. And then we also offer this as a subscription. So if you want to just sign up as a subscription, don't want us to handle the transaction for you, we offer this as a subscription based model
Mhm.
that's white labeled also to any company.
What we're in right now is widely considered, because of the high interest rates, the golden age of private credit. And for many people have different opinions on that, but that's a pretty common term for where we are now. When you started, this was not the golden age for private credit by any means. You started back in 2017. So what was that like? What was your mentality going into this at that point? And then what have you seen change over the last couple of years?
Yeah, absolutely. Obviously, there's private capital, equity, debt structured companies, VCs that want to do different types of investments and lending and their risk tolerance. For us, what we built is a full spectrum platform where we cover from A paper to D paper. So we have your traditional cookie cutter deals that are, hey, full financials. We also have our B to D where it's, online banks, community banks, state banks. Also, they are private money, hard money, insurance backed lenders where it's much more creative. Sometimes it's application only products, statement only, bank statement only, P&L only.
Mhm.
Collateral based, also it could also be non-recourse, where they're not carrying too much of the guarantor. But it also ties back to what I was saying earlier: is every lender has their money, and then they assess what their risk tolerance is, how they want to make money, right? Is it they're going to drive their revenue because the fees they're going to charge upfront, and they get that upfront while the rate is competitive, or they're making less fees upfront, but they're banking on the loan being paid off, or it's being used in its entirety based on the interest rate that they're providing to the consumer. And what we took advantage is like, let's put all of that into our database so we can attract every type of customer and get every type of customer the capital that they're trying to acquire.
Now, in times like today, where we're seeing less homes being bought because of the interest rates, uh,
Absolutely.
what innovations? Because there've got to be things happening in the industry to spur something. So, what kinds of innovations are you seeing right now to continue that money flow through the banking system?
There's a lot of new products coming out for first time buyers. I think that's always going to be the biggest niche. Good market, bad market. They're always going to try to draw first time buyers because it's a safe bet in essence. Why? Because they know the right now they're paying rent no matter what, right? Month in, month out.
Hmm.
And in this right now adjustment that's happened, rent is almost very, very similar, or even right now, a little bit higher than a mortgage. So you have an opportunity for first time buyers to always come in. So that's always something where different states, different government programs, lenders would like to attract, right? 1% down, 2% down, or hey, your first year payment, this will be the rate, and then it'll turn to this. So, they're banking on that a lot. Now, on the flip side, the opportunity that's happening also is development. Right now, there is a huge gap right now in construction, right? With
Hmm.
again, labor, supply, energy costs, it's tough to make the demands happen right now. So the reason prices are kind of staying the way they are and they're not really dropping is inventory is so low for construction region. But also when you have not the best rate environment, well, if I'm sitting in a house that's pretty comfortable and it's at a 3.2%, my upgrade isn't going to be that big in square footage, but that rate is going to be, I don't know, 5.5, 6%. I'm going
Yep.
to stay on the sidelines. I'm going to, well, I can upgrade for what, 100, 200 square feet more. My payment's going to go up 1,000 or two for it. I don't know if it's worth it. So that's the thing buyers need to understand right now is the timing is pretty good to buy right now because the second rates go maybe more into the low fives, mid fours. Now I'll go, okay, wait a minute. I'm at a three and a quarter. I can upgrade 500 square feet now. My payment goes up to 1,000, yes, but that upgrade is worth it. I'll list my property. Then you're going to have more in, much more properties and much more buyers at the same time. So you might still get prices to stay flat, maybe still get competitive, but you're now bringing in more sellers and more buyers. So it's tough for I know a lot of people always say I have a crystal ball. No one has a crystal ball in real estate, right? It's a matter of your capacity, what you're trying to do, and your risk adversity. That's always what I tell my clients is, you know, there is no always a good time, bad time. I mean, something's granted, right? 2008
Hmm.
crisis from 2008 to 12, you should have bought real estate. Everything was like dirt cheap. It doesn't always happen though, right? So it's like your capacity and what your risk tolerance is and what you're accomplishing. If you're simply wanting to leave rental, which is you're flushing money down the toilet and just buy, do it. You're getting tax benefits. Bottom line, at the end of the day, you're getting write-offs that you don't have right now, lowering your tax bracket, which helps you save more money too. So I think that's my teaching I always tell people is are you doing an investment? If you are, let's talk about it this way. But if you're just wanting to buy because you rent, that's a slam dunk. You should do it. As
Hmm.
long as there's a threshold that I always teach, and I've had success in 20 years of teaching first-time buyers how and what they should buy so they don't overextend themselves also and have realistic dreams. You're not going to be able to buy a mansion as your first property. You can build towards that though, right?
Getting back into the business of credit and lending, what are you looking for specifically in buyers? Because you've created this automated system that really expedites the entire process of this diligence side of things, right? It helps everybody. What are the things that you're looking for in buyers that lenders should be aware of or are aware of as they're lending their money?
Yeah, absolutely. And it sounds so easy, but it doesn't happen 90% of the time. And again, it just goes back to what Jack and I do in the front end. The profile questions that we have on our helpwithmyloan.com are your basic questions you should ask any customer, consumer or business to front end understand the scenario before you even take them down the rabbit hole of collecting packages, matching it to a bank or in your own bank, right? If you're a banker, you'd be
Mhm.
surprised how many times as a manager, I've led 45, 50 person teams where they don't ask those front end questions. They bring the deal, they've collected the package. I'm like, this doesn't match our credit box. So imagine they just wasted, I don't know, a week, 2 weeks, a day, or even, right? And that can demotivate someone, right?
But
But
what's their
also
motivation to do that?
they just wanna get the deal in and just like, "Let me see if I have a deal. Let me have," and, I call it false pipeline. And
Mhm.
it's something I've always, coined and said in my management experience and even today with our team. Don't create false pipeline. Don't get excited that a person is saying yes to you. Sometimes they're saying yes to you because, they've been turned down by 50 banks already. So it's like there's some legwork there. Or if someone just gives you a package immediately, that's a red flag. You don't have your package always available. You can get it to me in a couple hours on a day or two. But if I tell you, hey, this is my checklist, and in a minute you send it to me, that's a red flag because you've
Mhm.
shot this deal elsewhere and you've been turned down, or there's something you're not telling me. So for us, me and Jack said these key questions every time a deal, a lead, any channel comes to helpwithmyloan.com needs to be answered because it starts with our AI seeing that scenario, just the scenario to say, here are the banks already for it. From the 300, I knocked out 50 that cannot do this deal just based on the scenario. You'd be surprised how that alone is the first process that bankers, brokers, newbies to the industry just want to skip and just let me get the deal. You're frustrating the customer now and then you're not earning their trust. Where I have said,
Mhm.
this isn't a deal for my bank, but here, let me refer you to this person. That is a better experience also that I used to do at the banks. And right now we don't have that. 98% of the time we're saying yes, which is awesome. So yeah, that's the first step we've automated. That was our 1.0 version where people were like shocked, like, how did this not exist? I'm like,
Mhm.
surprised. Like a lot, all these technology that happens, right? It's someone thinks of it. It shouldn't be coming out as a surprise. If you knew it was awesome, you would have thought of it. But it takes sometimes people from the industry, like Jack and I are from, that we understood the consumer aspect, the broker aspect, the banker, underwriter, that whole aspect. And if you don't, you can't always build a platform like this. And that's why it's been challenging to have direct competition because you need to come from the industry and have those four things I just mentioned.
Mhm. Yeah, and so beyond the personal information and collecting all the buy box stuff, you get the credit information. Is there anything else that you're kind of looking for in these loans for credibility?
Then the creative AI part comes in where now we
Yes.
have those guidelines from the lenders, encrypted in our database, right? Because now okay, scenario matches. You're going to send a checklist of, hey, let's just start with a bare minimum your personal financial statement, bank statements, the mortgage statement, and your tax returns, depending on how complex that is, right? We get that. Well, the old school way right now is getting that, plugging in numbers on a spreadsheet that is like nightmare. Um, Sometimes have nightmares about it using it. But we created an AI. It uses OCR, optical character recognition technology, where now you get those same documents, you drop it into our software within minutes, right? It underwrites that entire deal. And then it takes the scenario, the financial underwriting, uses our database, and then tells you these are the banks that can do this deal. And then your client or yourself choose it, matched up with the top performer at that bank and representative. And then you move then towards, submitting it officially at that bank, having their underwriter officially, underwrite it still and do it because, they haven't all adopted our AI yet, but at least they're getting the front end aspect adopted, which means you're getting a deal on a silver platter. Now go do your legwork. You have to do your old school way at least like the customer is gonna be like pretty concrete of closing this deal.
Hmm.
Yeah,
Now,
so those are the 2 main things we've attacked. We have a lot more coming up next year in quarter 3, especially with the software we wanna develop on the middle aspect of the deal, and then pipeline management, also risk management and just portfolio management, being able to even tell you, "Hey, your clients you've done in the past, you have opportunities to do X, Y, and Z." Even that aspect, taking that away from the human mind and, human aspect of checking, just letting the AI do a lot of these things that, hinder the industry.
one of the things everybody has to face in the industry is regulations, and there are a lot of changing regulations. We got a changing administration coming in now, and it looks like there's going to be a changing SEC chair. So, with all of that in mind, how are you keeping up with regulations, and how do you have to structure? Is there anything you have to change in the system to structure for those regulations?
Yeah, the great thing is we are, first of all, a CFL licensed company, the California Finance Lender License. So from us, we are regulated where we get audited on every single production that's done through our platform or internally. We've passed that at
Mhm.
100% year over year since 2017. So that's the first thing. We have those rules that we follow. The second thing is, of course, every single product that is updated from the banks, we have basically a vetting process that if they're going to be in our database and be part of our network, they have to be updating us on their changes and their guidelines. And like you said, right, administrations happen, different positions get eliminated or changed. and then lending changes. So we make sure when our database is taking on lenders that they're working with us, whether we need to update their guideline daily, weekly, monthly, quarterly. It's something where if they're not willing to play game or they struggle with, we don't sign them up, or eventually
Mhm.
we have removed lenders that don't deliver. Because I'm not going to have our clients deal with what I left the industry and create this platform for. Is if you can't deliver and you're just floating this amazing rate that you are going to ask for a million things that don't make sense and you can't close it, you're going to really upset the customer, the broker, maybe even get the deal lost. I don't put them on there because it's not
Mhm.
about, the teaser rate that a lot of banks unfortunately do. They tease you with an amazing rate, string you along, bring you in, and then counter you, or just, you're so far along that you're going to
The
have to
bait and
take
switch.
exactly
Yeah.
bait and switch. It's sad,
Yeah.
but happens a lot in the industry.
Oh, it happens everywhere. It's too easy to do, and
Yeah.
it's something that we all have to watch
Something
out
that
for, right?
promise the world sometimes to come on board in certain banks,
That's
and then
right.
you get there, you're like, "This is what I signed up for."
Yeah. So being in this industry for as long as you have, in as many places as you have, in many different levels, you've seen a lot. What do you anticipate moving forward are going to be some changes or some updates in the banking industry moving forward?
I'm hoping now that I'm a big fan of Elon Musk. Whether or
Mhm.
not you agree with the political party, I'm not. I don't really care about political party. I just care about what you are as a person. I am a big fan of his. I hope he brings a lot of technology. One thing I would love to eventually, if we can somehow get our technology through this new administration to understand how we've helped during this crisis times of, when COVID happened, we were one of the best platforms to get an EIDL loan, which is emergency injury disaster loan that the government does throughout any state for different disasters. We were big on the PPP round one and two, the payroll protection program. And, a lot of people said this technology is amazing. So I think it's going to take finally, the right administration, the right people to help banks understand, dude, how are you going to make deals move better, risk tolerate right less, because all these banks that have failed these few years, it's like so avoidable, right? It's because lack of manpower, the way they're still, looking at the renewals and different things like that. I hope there is going to be that finally push forward that they see you can augment talent and technology while keeping your risk tolerance
Mm.
where you want it and move things much faster. I mean, who wouldn't want your bank to move 80% faster? Your production is going up, your sales team's production is going up, and bottom line, your revenue is going up while spending this much money because it's technology. You don't have to train this AI anything. You're going to plug and play. That's pretty much what I would love to see happen in these next few years, and it has to happen. I mean, how many times do we want to repeat the same cycle of bank failures, portfolios blowing up, a bank has to buy another bank, like bailouts, like it's like kind of that quote, right? Doing the same thing day in and day out and expecting a different result is literally the
Uh-huh.
definition of insanity.
So, real quick, coming back to 2020,
Sure.
you've been through a lot, and 2020 was a real pivotal year for you. It was for everybody, but you had a very
Yeah.
unique experience. Just to close out here, what was that experience like for you, and how did it lead to where you are today?
Yeah, my biggest learnings from 2020, unfortunately, and I guess fortunately, a couple days before I was actually getting even vaccinated, I had the symptoms. I got hit with the Delta variant. I isolated, and then on the eighth day, my brother was dropping off food, and he saw that I was yellow. I'm
Hmm.
pretty fairly tan, so I looked yellow, and that whole day I had already felt tightness. Long story short, my oxygen level, as my doctor said, if it ever dips below 90, you gotta go straight to the ER. So, my brother told me that. I went and checked, and I was right around 90. And then, and I checked again 5 minutes later, it was 89. So he's like, I'm like, I gotta go to the hospital, man. Let's just not risk it. And I went. As I was getting there, my tightness started getting worse. And then by the time they checked me in, my oxygen had dropped down to 84, and then they rushed me to the ICU at that department, and it was pretty intense. I somehow stayed calm because they were telling me, but I was just trying to do everything they did. They put oxygen mask on, that didn't work. They put oxygen tubes, that wasn't working. I saw that my oxygen had already dropped down to almost 72. My heart rate
Ooh.
was down at 38. They had hit code blue already, and I saw on distance already the defibrillating team there, the inducing team for the tubing, for the ventilating team. And I think the last part of it where it almost felt very surreal is, the nurse next to me was like, caressing my hand. I couldn't feel that anymore. The voices in the room started feeling like distant, like almost like a mile different. And it's a little bit emotional, that part where people have talked about the white light. It's like that started happening with the lights, and like the room started turning like halfway like blurry and white. Like and it just started feeling like I was leaving. And it was just like, feeling that like I'm really looking at it. It was really intense. And I just remember hearing one last time from the nurse saying, Chris, like one more deep breath, and I still had calm over me. And I took that last like, with the mask on here, this big bag down here, and then all of a sudden, I saw the oxygen shoot up from, where it was down to almost 68 at that time,
Mm.
shot back up to 70. My heart rate went to 42, and I started going back up. I started feeling your hand back, like the white lights kind of like started shrinking. It was like unreal, and then it just kind of like started stabilizing, and then like I just kind of felt like that tightness go away. And long story short, I was in the hospital for about 2 weeks, 50 different medications, IVs, oxygen mask. Even when I got discharged, a month and a half of oxygen machines in my house here. And I think the biggest thing that kept me going is my faith, my friends, and my family. And, you know, it was my daughter's birthday that month. She was going to turn 2. And I just kept telling myself, I'm going to get out to make it. And I literally got discharged 2 days before her birthday. There's pictures and videos of me like celebrating here with like literally IV still in my hand, oxygen tube here, helping her blow out the candle with whatever lungs I had left at that time. But yeah, that Delta variant really like affected me to almost like dying. It also even created pneumonia in my right lung, and it was all full of fluids. So, and it took me
Mhm.
9 months in general to recover from it. I had to do different, like 8 IVs a month that my doctor was doing, 4 antioxidant IVs, different workouts. And, basically from even looking this way, I was a 275 pound person back then. I'm now down to 187. And it really changed my life and what I value even more. And it was while also running a business. I still had my laptop in the hospital. I was doing everything, but yeah, that was a big moment personally for me that just kind of made my faith even stronger and just made me like really appreciate every day and try to do something big while we're here, right? Because it can go like that.
Mhm.
That's pretty much what I felt.
Well, Chris, thank you so much for spending this time with me today and for
Absolutely.
all the,
Thanks for
the
having me.
nuggets of wisdom you've offered. Uh,
Appreciate it.
Take care.
Thank you, man.
We hope you have enjoyed this episode of The Alternative Investor. If you found this valuable, please be sure to like, subscribe, and share. This show is brought to you by Honey Hive Capital Partners. Visit us at honeyhivepartners.com to continue your alternative investment journey. This recording represents the views and opinions of its guests and does not reflect the views and opinions of Honey Hive Capital Partners, LLC. Nothing in this recording, nor any communications from it, should be treated as constituting financial, investment, legal, tax, or other advice of any kind, or as a recommendation to buy or sell an interest with respect to any investment. We look forward to you joining us next time.